Cool. All right. We're back for another live conversation here in Mexico City. We're in the Stable Dash. I guess we're going to call this the Stable Dash podcast booth. It's been really fun. We've been here with Bits of Business. Booth is powered by Agora.
Stable Dash Live is sponsored by Agora, built for global institutions moving money at the speed of the internet. You can learn more at agora.finance.
We've been having, this is our second day here at the conference, having live conversations with the top founders, operators, and investors in the space. So Alex, let's start with your intro and what you're building at Verda Ventures, and we'll kick it off with that.
Sounds good. And thank you for the invitation. So I founded Verda Ventures about a year and a half ago, solely focused on stablecoin infrastructure, in particular around emerging markets, global south, and cross-border.
An interesting time to start a stablecoin focused. I think that was right around the time we started our media business, just like a year and a half ago. Perfect time to kind of get in the game with the infrastructure stack.
Absolutely. So this is pre-Genius, follow like getting past. And because we were early, we actually got a lot of advantages in getting some interesting strategic LPs. Like we were the first fund that Tether invested in. So because of sort of that first to market early advantage, we were able to land some interesting strategic LPs as well.
Yeah. How did, maybe we start there. So how did the history of your career lead you to the point where that was a good idea, or that was something that made sense? I'm gathering you probably had some, you knew it was the right place at the right time to go build this. Like, where did that insight from your background come from?
So I've basically been building towards the same thing for the past decade. And I started my career in traditional finance, very boring, Goldman Sachs and JP Morgan. And it was very clear to me that the financial system was quite broken and inefficient and did not work for the vast majority of people. So after that, I started an equity crowd investing platform. And it was around that time that I read the Ethereum white paper and realized that there's a far more efficient way to raise capital, to transact. And so I went head first and co-founded a sort of cross-blockchain liquidity API company. The problem at the time I realized was that the infrastructure wasn't there. So this
is like late teens, or
this is 2018, 2019.
Yeah.
So if you remember back then, like an Ethereum transaction could cost like $100.
Yeah. And
you're waiting like up to an hour for it to properly like settle, assuming like you paid enough gas to actually get it, in the across the mempool.
And you've survived like the awful user experience to get there, to create a wallet or whatever it might be.
So I created this wallet and liquidity API, but then we were bottlenecked at the infrastructure level. So I ended up joining Celo in 2019 before, so pre-testnet, very early days, just sort of had a white paper, and one of the first sort of dozen people to build out sort of a mobile first stablecoin payment blockchain. So it started as a layer one, as a fork of Ethereum, and then it went to eventually become a layer two. But it was to me, it appealed to me on many levels. Like one, they had public key address phone number mapping. So you could send money to anybody in the world just knowing their phone number. A second piece was you could pay gas fees with the stablecoin. So instead of needing to use ETH to pay gas, you could just use USDT, USDC to pay the gas fee.
Yep.
So fast forward to 2023, like infra, in my opinion, was largely solved for, meaning, NEL2 was processing transactions for less than a penny. You had near instant settlement. Throughput was in the thousands of transactions. So,
and there were some great companies using like the brands. We've actually hosted some of these founders, like Phone Bank, Opera,
Portcos. Yeah.
And then there was another wallet, begins with a V. I think they got acquired. I'm forgetting the name. Valora. Yeah. Jackie. Yeah. Like some really, really amazing founders and businesses like within that Celo ecosystem.
Yeah, and from day one, embedded in the white paper was like mobile first stablecoin payments. Like that was like the vision from day one. And now we're seeing a lot of that play out. So is that in many ways it was quite like ahead of its time and visionary. So fast forward to 2023, like in my view, this infrastructure blockchain infra bottleneck was solved for, and I wanted to move up the stack to be closer to the application layer. And I was thinking, okay, what's the best way to express this bullishness? Because we felt that there are going to be a lot of regional champions. So you're going to have like a regional champion in Latin, a regional champion in Africa, and it's going to be somewhat fragmented in that sense. So I decided the best way to express that bullishness and sort of help move the space forward was through a fund. So I created Verda Ventures as a stablecoin infra focused fund with a global mandate in about sort of end of 2024, beginning of 2025. And it's, I believe we're now sort of able to realize the value from the infrastructure that has been built over the last decade. And we're placing our bets on what I think are the best founders in the space.
Let's go. So, okay, so give us the kind of bird's eye view of the firm right now. So what have you raised? Who have you raised from? And then would love to like kind of highlight a couple of these even companies in the room right now that you guys have gotten behind. What does that look like so far?
I think a third of the logos in this.
Yeah, we got Mural.
Mural Pay, Lumx, Dorado. Like I think I want to say like a quarter of the booths here are companies we've invested in.
Big raise from them yesterday. That was awesome.
Yes.
Shout out to the Dorado team.
Yeah, no, Guillermo is incredible. They have a great team. And yeah, we were one of the investors in that last round alongside Paradigm and Coinbase Ventures. So yeah, the basic situation, we raised $40 million in capital. We've deployed over 25 of that, and we continue to actively look for the best companies in the space. So the primary areas we've invested in are like the leaders in LATAM, Africa, and Southeast Asia. So in Africa, for example, we invested in Yellow Card through secondaries in that case, and we're very bullish on LATAM, Africa, and Southeast Asia as sort of the areas that are going to see the most explosive growth around stablecoin adoption in the next 12 to 18 months.
Yeah. So what are some of these like key focus areas in terms of opportunities? I think you mentioned like FX is one, privacy is another, agentic commerce is another. I don't know if you want to hit one of those or how you think about the opportunity that's ahead, but would love to kind of get into your brain a little bit in terms of where you really see defensibility and like true value being created as kind of the coverers or followers of the space. It's like we have a similar vantage point in some ways of like tracking and following what's happening. And it seems like we're in a really interesting moment of like, frankly, I think a lot of these kind of orchestrator layer, middle layer companies are struggling to find their footing and truly know who they are and where they play. Everyone's kind of trying to be a lot of things. And at least right now we're kind of in the middle of this consolidation period. So I just would love your like macro takes on any of those three topics and how you're thinking about like, truly what's valuable. Loaded question.
Yeah. A lot of good embedded questions there. So in terms of like what's truly valuable, in general, we are looking at companies that own the customer, the client relationship.
Snaps. We just got a snap for that. Yes.
Because that's extremely sticky, particularly for these cross-border B2B payments. They are, once they invest in a relationship with these companies, they tend not to move. And there's a few reasons behind that. One is, their compliance stack is built out, right? So it's rewriting that compliance stack around a different company, very, cumbersome, high friction. Another is they have a lot of their treasury management associated with these stablecoin infra facilitators. So there's sort of several dimensions to the relationship that make it extremely sticky. So that's in terms of value accrual, that's a key focus area for us.
It's like El Dorado is a great example of that.
Dorado is a great example. I think Yellow Card is another great example of this, where they really have the brand.
Yes.
They have
They're not embedding themselves under some other company. It's like when you think about who you're working with, you think of them.
Correct.
Yeah.
Right. If it's a business in Africa, then you say stablecoin infra, like more likely than not, they're going to think a Yellow Card. Another one we did, which you just mentioned, was Phone Bank. Awesome. Also,
shout out Chris.
Yeah. Both of the founders' names are Chris.
Yes.
And he's also a super strong founder.
Yeah.
And similarly has taken that route. So on the three sort of verticals you mentioned, I think the nearest term biggest opportunity is the FX piece. I think that's like very ripe for disruption.
Yeah.
So FX is the largest market by volume. It's in the tens of trillions of dollars on a daily basis. And it's still extremely inefficient. And there's like a lot of the transactions happen through OTC desks and relationship driven.
Manual process.
Super manual and has to be done in super big clips. And you have like all these inefficiencies around the rates. Like there's a black market rate in all of these, and then there's like an official market rate. And there's a clear opportunity here, just like you had a breakthrough with creating markets through Uniswap. Anybody could create the market. You had an automated market maker. Like we're going to see breakthroughs to dramatically increase the efficiency of FX transactions on chain, I think within the next 24 months. So near term, we see that as the biggest opportunity. And you're going to see a lot of that go through the relationships I just mentioned, meaning, you have one of our portfolio companies, Alpha Pay, and others, Mural Pay. They own these relationships. In our mind, it's a natural evolution for them to offer this additional service, meaning they're already helping you facilitate cross-border payments. They're already helping you manage, some of your treasury. And then you sort of cross-sell or add on this additional layer of providing FX services so that these businesses, which are operating in different jurisdictions, different currency regimes, can make sure they have the right balance of currencies to meet their liabilities and their local expenses in those markets. So we think that's sort of a very natural evolution of where we are, right? Obviously,
it seems so confusing to me sometimes to know the difference between like, you have like, just think about Alfred or a company like them. You have like the treasury management business, and then you have these like on and off ramping, or what we call on and off ramping, where you're swapping between like stablecoin to fiat to stablecoin. Like that seems already very similar to this like FX, because like FX could be traditional, but it can also be like tokenized in terms of how these things are represented. We were meeting with like Etherfuse earlier today. You have Mental Labs doing some really cool stuff. Agora is doing some really cool stuff. Like how do you differentiate maybe those kind of traditional ways of thinking about on-off treasury management, moving between stables and fiat versus like really like FX more broadly? Like how do you think about the differences there?
So we're in this transition period where you kind of have really good native support of US dollar stablecoins and tokenization. So you think USDT, USDC, but not so much for the non-USD pairs. And you kind of have this relatively inefficient process where you're going, between sort of a local fiat account into USDT, USDC. And we think the natural evolution is you're going to have, a tokenized Mexican peso that can directly interact with a USDT, and, real-time settlement, kind of transaction fees under, 10 cents.
Yeah.
And
it's like with Bitso's like MXNB, for example.
Right.
And so like, I know,
but it's still early days.
Yeah.
And like, we think that it is like a little bit harder than many people think to build out the proper liquidity and network effects. But our bet is that it's going to happen in the next 12 to 24 months.
Is that why, in your view, you see just like the brand that comes to mind is OpenFX, and just like, how much did they raise again? I'm like blanking. It was just absolutely, I was like, I saw that raised announcement and I was like just completely blown away by it. Do you think that's why that is so large, is that they can kind of solve some of those liquidity problems with that capital? Is that the idea, do you think?
I think that is part of the idea. I think So we're relatively cheap as a fund. Like we don't sort of, we're not Andreessen Horowitz with $2 billion raised or Katie Hahn with $1 billion raised. So, those kind of rounds we generally are think are a little expensive. But with that significant amount of capital, they can use some of it to create liquidity pools to support sort of some of the initial bootstrapping.
And that's like, is that generally is that like a good use? Are you seeing that type of behavior where like the investment capital that comes in is actually used to kind of solve some of these network effect problems? Is that common?
To be honest with you, I think there's too much
Seems
money.
risky.
Yes, I think there's too much money chasing highly bid up opportunities. And our view on the market is that we want to invest in players that already own the relationship and then expand the capabilities and offerings to those pre-existing clients with FX versus try to like create everything themselves from scratch. We have a great portfolio company called Kappa, founders Fundi, and he works very closely with Bitso, and they're able to collaborate in a very capital efficient way. And it just had massive revenue growth. And didn't need like a massive raise to do it, but they were able to sort of tap on these pre-existing resources, these pre-existing relationships, and build out that traction.
Yeah.
So those are the kind of opportunities that we're bullish on and see the clearest go to market for.
Yeah. And so talk a little bit about the something that you seem really clear on that I also really resonate with and believe in, that unfortunately I see a lot of companies under prioritize, is this idea of brand and owning the relationship. And like, I think we're about to enter this like really powerful like value around brand and being able to use a lot of the infrastructure to go build the new primitives. Why do you think things like brand is so important right now? Why do you think that's so powerful when you're looking at companies to invest in?
I think it's because when you have a brand, you become the default choice. So like when people buy a phone, like they often just buy iPhone, not even looking into like the other options. It's just the default option, and that means you are acquiring customers for a much lower cost. So Apple doesn't, have to worry as much about their competition because they're attracted to that brand, and they become the sort of default that people go to. And so we look for the dominant brands in these regions. And in many ways, like one of my chief jobs is to sort of pattern recognize what's working in one region and apply it to another region and find those local leaders, either the top one, the top two. And so as you look at some of the companies we've invested in this region, like Alfred Pay, like Mural Pay, they have emerged as a brand that people trust. And that brand also translates into a lot of referrals, which is sort of the quickest conversion, the best form of marketing to expand the business. So we think that brand in general is a vastly underestimated asset. And sometimes if you can learn a lot by looking at other industries, and you see the value of brand. You can more clearly see the value of brand in by cross-referencing. It's like Coke or Pepsi. Is Coke really that good? Like maybe not, but they have the brand, they have the distribution, and that is sort of a key attribute to their success.
Yeah.
Of course, you still have to have a great product, but great product plus brand is the magic formula.
What do you think is more important right now, brand or product?
I mean, both are critical.
You need both, but I see less brand focus and way more product focus right now.
Yeah. So you're correct. Like, and historically our like industry in general has had a lot of like tech nerds that have not valued the brand, the marketing, the sales piece nearly as much as they should. Ultimately, like you can have a great technology, you can have a great product, but if nobody uses it, it's not very useful. So I think you start, in my opinion, with a product that solves the most painful need. And then you evolve from there. Instead of trying to like go out the door with the perfect product, you start with something that addresses a pain point, and then with customer feedback, iterate from there. But both are obviously critical, but I think in our industry, there has been a huge bias towards overly focusing on product without thinking about the go-to-market, the marketing, the sales. And in many cases, especially with Claude and AI now, the product is not the hardest part.
Yeah.
I mean, you and I could jam on Claude, could vibe code, and actually come up with an MVP on Claude code with relatively little effort. So I would say that this is because not only a pre-existing bias, but it's being exacerbated as the worst direction due to the rise in AI making product development much easier, much quicker.
Yeah. Yeah. There's definitely I think an outcome of this reality where media and like conversations like this become extremely important in decision-making, whether that decision-making is on behalf of a human being or an agent looking to like get insight. So yeah, we could open a whole can of worms on that, but I know we got to wrap here. We're going a little over. So as we end, you are 25 out of the 40 deployed. You're like a little over halfway through. What can we expect from Verda Ventures through year's end? What is like the typical check size? How often are you writing checks into these companies? How long of a runway are you expecting to go through that with? What can we be expecting, especially for founders right now that are fundraising? Like, what should they know?
Yeah, so the total deployment period that we've been communicated is like 3.5 to 4 years, and we're like a year and a half through that. Some of our remaining capital is going to be doubling down on our winners, like some of the players I've mentioned, like Mural Pay, Alfred Pay, Lumx, etc. And we have like a little bit of a barbell approach to our portfolio construction. So we've got 80% of the money goes to sort of post-revenue companies, and then we've got 20% that goes to these pre-seed bets. So these are early days companies, and we are actively looking at both buckets right now. So a lot of our best investments have come from founder referrals. So we're actively looking for who are the best players, the strongest founders. We also have a website that we publish called stablescape.xyz, and it's the most comprehensive overview of stablecoin companies globally. So we track over 3,500 stablecoin companies in real time, and we're every day going over, like rinsing over that database of companies and looking at the on-chain analytics, the real-time traction. So we're like I said, we're actively deploying capital. We are open to referrals.
Set out. And you're mainly looking at like, we'll have to pause there. I want to talk. So stablescape.xyz, go check that out.
.xyz, and it slices and dices the data by all sorts of, I mean, you can see the number of agentic stablecoin companies founded in a certain year.
Okay.
So you can really nerd out on the data. Yeah.
And it's completely open source.
It's free. It's open source.
Cool.
You can quote it. We believe in open source.
Let's go. Cool. Alex, thanks for the time. So fun. I'm excited to stay in touch with you. That was our live conversation with Alex from Verda Ventures. Thanks for tuning in live. We're going to take a quick break and we'll keep it rolling. All right. Thanks, sir.
Thank you.